This is the Financially Simple Podcast, a show dedicated to destroying the complexities of money for today's small business owner. And now, here's your host, pizza-loving, certified financial planner, Justin Goodbread.
Welcome to the Financially Simple Podcast. This is a finance show for small business owners about money, how it works in our business and personal lives, and how we can build wealth to be financially independent. I'm your host, Justin Goodbread. Today's topic is merchant services and how business owners can evaluate their provider. Today, I have a special guest on the show to talk about the subject which horrifies, candidly, it just scares the devil out of many business owners. So I ask you, when you hear the term merchant services, how do you feel? You know, I know personally when I owned a company which relied on payments from credit cards and debit cards, the merchant service processing business just frustrated the devil out of me. I could never understand what I was paying, and the fees always seemed to change. Sometimes they would go up, sometimes they go down. You know, if you feel this way, then listen up today. My guest today on the podcast is Harold Friedman of Merchant Services Consultants, LLC. Harold owns Merchant Services Consultants, which is a Tennessee-based company specializing in providing, obviously, merchant services to businesses nationally. When I asked Harold how he entered the field, he told me a cool story. He told me, he said, you know, Justin, my parents owned a retail store, and this was my first taste of merchant services. This store was open for over 54 years. So, see, Harold knows what it's like to be on the owner side of the table, friends. He's like you and me. In fact, he owns his own business. So he knows what it's like as us proprietors when we're facing these merchant services decisions. He went out and earned a degree in business from Memphis State University. And in 1973, now that's some time ago, Harold, we're not going to ask ages here, but in 1973, Harold became the CFO of his parents' store. And under his guidance and his tutelage, his store grew to 3 locations. And believe it or not, in 1994, he joined the minority. He actually ended up selling this family business. So now fast forward some time after 1994, Harold soon took a job as a salesperson in the merchant services field, earning several key awards. He and I were talking about those awards off the air. And because of this experience, Harold saw the pros and the cons of the merchant services field. And out of this experience birthed Merchant Services, LLC. So with that introduction, welcome Harold Friedman to the Financially Simple Podcast.
Thank you, Justin, for this opportunity to do a quick presentation on Bank Card 101.
So, Bank Card 101, you know, I got to ask you right off the bat, Harold, why are we calling it Bank Card and not credit cards?
Well, because merchant services is composed of a lot of different things other than just credit card processing. Merchants may need a check guarantee program. They may need an ACH program. There may be some integrations with existing software programs they have. So it's more than just sliding a card through a credit card machine. So merchant services encompasses various different programs that are benefits or can be benefits to merchants across the country.
So let me ask you then, Harold, what is the biggest or the most common misconceptions regarding bank card processing?
Well, that you can't always trust your bank. Typically, a bank will subcontract out the service, and it's up to the rep from the processor, not the bank, who will service your account. He or she may not fully understand your business needs, and they may or may not provide you the best program, rates, terms, and service.
So hang on a second. You're telling me that if I go to the bank, if I go down the street to Acme Bank that I typically use for my business, and I ask them to help me set up merchant services, that it's not the bank who's actually doing it, it's actually somebody else?
In most cases, it's not the bank. There's some large banks that do their own processing and they have their own reps, but basically they just farm out the service and have an association with the processor just to get the kickbacks.
Interesting. So one of the complaints I hear, Harold, from small business owners, and in fact, you and I sipping over a cup of coffee not too long ago, we're talking about this. You know, I hear many times people run down, you know, in the infancy and during the startup, and we're kind of dealing with that theme in this show. Whenever somebody starts up a business, they'll run down to the bank and they'll say, hey, I need to be able to accept credit cards or debit cards. That bank is not the person who's ultimately going to come out to their place of operation and set them up. It's going to end up being a third party. Is that what I'm hearing?
That's absolutely correct. And also another misconception is that credit card processing is not a commodity. when businesses say they are shopping rates and will choose the cheapest, this may not be in the best interest of the business in the long run.
Why is that?
Because a business needs to interview the various sales reps to really find out the best knowledgeable person who is responsible for taking care of your account.
So, Harold, in a lot of businesses, like in the sales world, I know we're not here to pick on banks. I had a banker on here not too long ago, and they have their place. But oftentimes now in the banking world, we see a lot of turnover. I could just imagine that if I'm out trying to interview multiple people and I find, Fred Flintstone or Barney Rubble at a bank, that in the next 3 or 4 or 5 months, more than likely, I'm not going to be dealing with Fred Flintstone or Barney Rubble. So does it really matter that I have to have somebody who's knowledgeable in that particular moment, or can I not just hire the company and let them do their job?
Well, it's kind of a crapshoot to take who they send out. A bank employee may go out if they're doing it themselves, but typically they'll farm out the business and send in a rep, and maybe the business and the rep just don't click.
Huh.
The business can call the bank back and say, do you have another rep? Let me talk to somebody else. Because they're handling the funds of the merchant, and the first thing a merchant's going to do is call the rep if they have a problem. The rep should be able to handle the problem, know where to go to fix the problem. Sometimes it's a technical issue where, yes, the merchant just picks up the phone and calls the help desk, and help desk will say, push this button, push that button, and it's fixed. But a knowledgeable salesperson is key in the success of things running smoothly and getting the services and the benefits and the rates that you really want.
So you mentioned rates, and the biggest complaint that I have or had, I currently don't deal with merchant services in the aspect that many of our listeners do, but whenever I was collecting credit cards or debit cards for services, I really got frustrated with fees. And you mentioned rates. I can use the word rates. I got frustrated with rates. And so, Harold, I got to ask you, if I'm a small business owner, how can I evaluate the rates that I'm paying for the services that the merchant is providing? How can I go and do an evaluation, or is that even possible for me to do as a business owner?
Sure. Let's talk about Square first, because a lot of people have heard of Square. Maybe they use Square. It's a flat rate. Sounds like a great deal. Well, if the business has any decent volume of credit card processing, Square is very expensive.
What would you consider decent volume there, though?
Well, let's say more than $10,000 a month in Visa and MasterCard sales. Okay. Square was set up years ago for someone that had a business in the flea market that did maybe $400 a month in credit card sales.
Right.
So the flat fee sounds fine. People knew what they were paying. If they swiped a card, it was one rate. If they had a key enter the transaction into their phone, it was a different rate, and it was pretty simple. But being simple doesn't mean it was the cheapest. Right. And not only are they not the cheapest in the long run for bigger volumes, there is nobody you can call at Square, period. Right. You can't pick up the phone and talk to a real person. You have to go online and request they get back in touch with you and that sort of thing like that.
So let's lay this out here then, if I heard you correctly. My daughter, for example, on the podcast I've talked about in this past, she makes these little crazy bath salt things that you put in the bathtub that makes it smell good or whatever for girls. And she uses Square, but she's not running $10,000 a month. And I'm sure there's many business owners out there who maybe have that one credit card transaction a month. In that type of world, though, a Square may be a viable option.
It's a perfect option. Actually, my cutoff when a business comes to me, if they're doing less than $6,000 or $7,000 a month, I recommend Square.
So once we then get over that $6,000 or $7,000 a month, that's whenever they really need to start looking for the services from a professional at that point. Is that right?
Traditional processing is more important and can be cheaper than Square and have more benefits and definitely more service.
Now, what was that term you just used?
Conventional processing.
Conventional processing. Okay. And how do you define conventional processing?
Well, a business that does, 7, 8, 9, 10,000 or more in volume per month, they need conventional processing. It's the little bitty few $100s a month businesses that are better off with Square.
So those individuals who are dealing with conventional processing, now they're going out and they're trying to find a processor, someone like yourself. How do they evaluate the fees? If they're not paying the flat rate and they're paying some sort of a sliding scale, et cetera, I know that I've seen thousands, it seems like thousands of different scenarios. How do they evaluate what's a reasonable fee?
Great question. Okay. First, you need to understand how Visa and MasterCard works. Every business category has an MCC code, which stands for Merchant Category Code.
Okay.
There are over 200 different rates called interchange. This is what the card issuing bank gets out of the sale. If Bank of America issues a Visa card to a customer, roughly 80% of the fees paid by a business accepting this card at the time of purchase goes back to Bank of America.
Okay.
Visa and MasterCard corporate receive about 12 cents to 13 cents flat rate per $100 of sales. And there's some small miscellaneous fees, such as a monthly account fee and PCI fees. And these fees are added by the processor or independent sales offices. And these independent sales offices are known as ISOs.
Okay.
Then the ISO or processor adds their markup. This is where it's important to understand. Typically, the markup should be computed or quoted as basis points for what they do.
Hold on a second. Let me keep up with you here, okay? So I'm the practitioner, and I have a purchase. There's a percentage rate that's being charged on my purchase, whatever that percentage rate is. You said about 80% of that goes to Visa, MasterCard, American Express, Discover, whoever the card is. About 80% of that fee that I'm paying
goes back to the bank that issued the card.
It goes back to the bank. And then there was some ancillary fees that just make sense, just for different things.
Yes.
And then on top of that fee, there's also an ISO fee. Is that correct?
Yes, that's the markup. The processor or the independent sales organization adds to it for their profit.
So the controlling factor then from like a service or the bank or anybody else, a merchant service, they really can't affect the credit card company's fee. That's probably, I'm assuming, set in stone?
It's set in stone.
Okay.
When a business does more than $500 million in volume, then they get a better rate.
Wow.
So any businesses under $500 million are all on the same level playing field of same rates.
Interesting. And so the people that are nickel and diming over is the ISO fee, more than likely.
The thing to stay away from specifically is bucket pricing or tiered pricing.
Okay, let's explain both of those. What is bucket pricing?
Bucket pricing is where there's a qualified rate, a mid-qualified rate, and a non-qualified rate. Or sometimes it's a qualified rate, a mid-qualified rate, a key entered rate, and then a non-qualified rate. And these tiers or these buckets can vary as to what cards go into those specific buckets, they call it. And this is where it can get very expensive for a merchant. Because if a merchant says, well, I signed on to pay, I'm just going to throw out a number, 1.75%, the merchant's thinking, I'm paying 1.75% on everything. No, that's not the case. The 1.75% is only a qualified rate, means the lowest credit card category of that card, which is just a very basic Visa or MasterCard card with no reward points. It's a swipe card. It's not a key entered rate. It's not a corporate card. So if they think they're getting 1.75, it's only very few sales are going to qualify for that.
So I just pulled out of my wallet, Harold, just to make an analogy here. I have the Capital One Venture card, I think is what it's called, and I have an American Express card that I personally use. Both of these have a lot of cash back and points on there. If I go into a proprietor store and swipe either one of these highly labeled point cards, they're not going to get their 1.75% charge on that because it's a higher valued reward card. They're going to be charged more for those card swipes?
Absolutely more. And this is where the merchants get ripped off or can get ripped off because it's not Visa and MasterCard paying you that 2% back. Okay. It's actually the merchant that card was used at that's paying you the 2%. Cash back or airline miles or whatever the case may be. Wow. Whether it's you go into Walmart, you use your Capital One card at Walmart, it's costing Walmart 2% added on to the fees. The processor has to, it's a different rate category. That's how you get the 2% back. Again, Visa and MasterCard corporate are only getting 12 to 13 cents per $100 flat rate.
So you use Walmart. If I go to Walmart and swipe my Capital One card, Walmart's paying the Visa MasterCard rate. They're also paying those small fees. They're also paying the ISO fee. And now they're paying that, let's use that your number, 2% cash back all out of the transaction.
Correct.
Wow. So I would imagine then from a small business owner's perspective, I mean, I'm just thinking, I don't feel like I'm a dummy. I know math. And I know a lot about business, but man, I would think I'd have a hard time evaluating the scenarios using this bucket analysis that you're talking about.
Well, let me give you an example of one business that was in the Knoxville, Tennessee area, a very prominent business. The merchant is very well established, and he's a very smart and astute businessman, but he got conned, and this is how he got conned. He got a phone call from someone that happened to be in Atlanta, but that doesn't matter where they're from, but the rep says, I can give you a 1% rate. And so the merchant said to him, well, if I'm only paying 1%, where do you make your money? And the rep said, we make it on leasing equipment. So the rep showed up, the merchant signed up, and it's not a car dealership, but he has a parts department and a sales department. He needed 2 different credit card machines. So he leased 2 credit card machines for $99 per month each for 48 months. So he's paying about $10,000 just for the credit card machines that actually only cost about $200 to buy them. Okay? So then he gets his bill, and I contact him, and I look at the bill, and he's actually paying what's called an effective rate. And let me explain to you what an effective rate is. An effective rate is where you take the fees you pay as a merchant and divide that out by the dollar of transactions that you had on the cards.
Okay.
One number to the other, and it comes up a percentage, 2 point something, 3 point something percent, whatever. Okay. In this case, when you divided the numbers out, he was paying over 5%.
Wow.
He thought he was paying 1%. But it turns out that the 1% was only on check cards and debit cards, not on credit cards.
So he thought he purchased a fee of 1% carte blanche across all products, and ends up being that because of the bucketing system, that some of those other buckets, which had higher cashback rewards, et cetera, had a higher fees. And thus, whenever you did the average, the effective rate, which is where you're averaging the total dollars amongst the amount of transactions, he ended up with about a 5% effective rate.
That's correct.
Holy Batman, dude. That's not cool.
No, it's not, but that happens every day.
You are listening to Financially Simple, destroying the complexities of money for today's small business owner.
So what should business owners look for? If they're trying to stay away from this bucket weight, are there any other scenarios that could cause them problems?
Well, again, the merchant is advised to be on interchange plus pass-through. That's what it's called, or interchange plus.
Now, let's explain that. Let's explain, because I don't think we talked in detail about interchange plus pass-through. What exactly does that mean?
Okay. Visa and MasterCard have over 200 different rates. Again, we talked about MCC codes and so forth.
Right.
But anyway, depending on the kind of card it is, whether it's swiped, whether it's keyed, whether it's a reward card or a corporate card, these all have different fees, which are comprised of a percentage plus a transaction fee. So it may be 1.65% plus a dime. It could be 2.20 plus a dime. It just depends. Now, this interchange chart is now available, obviously, online. You can find it. You can Google it, and everybody can look up what these rates are. So what the key is to the merchant is finding out what the basis point markup is that the processor or the ISO is adding on top of these interchange fees.
Okay, let me hold you right there for a second, because I'm going to try to catch up with you in my simple mind. So let's use a Visa or MasterCard. They put out an interchange rate that's available, that's just public knowledge. And if I'm the proprietor, I can download this interchange rate. And then my job is find out what the fee is that's added on top of the ISO. Is that correct?
Correct. What the markup is on it. Okay. And the specific terminology is called the merchant discount fee.
Okay.
That is the key to everything, okay? Because that's what drives what the actual cost is to the merchant. because interchange is non-negotiable.
Right.
A merchant has to pay that, okay? And then there's PCI fees and some little ancillary fees. But the major thing is on pass-through interchange, the card will come through the system at that rate that's online. And then the key is how much is the flat rate? Well, I say flat rate, but it's so many cents per $100, known as basis point markup, that the ISO or the processor is adding. This is the key to the whole thing in a nutshell. This is the common denominator that drives whether you get a good deal or you don't get a good deal. In other words, to keep the math simple, the processor may add 0.25% as a markup. Another processor may mark 0.5% markup. Another processor may add 1% markup. That's a big deal when you're talking about doing $100,000 worth of business.
Right.
You know, those basis points, one basis point is, in terms of the big scale, it's $100 per $1 million of sales.
Wow.
Okay. So it's just like getting a loan at a bank. Well, what's the rate and so forth? Okay. So this drives what the ultimate cost is to the merchant, getting the lowest basis points possible. And they have to disclose what that merchant discount fee is.
So, man, I feel like I've just taken an advanced level college class on credit card processing or merchant fees. Let me ask you, though, if I'm the business owner and I find a good provider for merchants processing that I like, how often should I go in and evaluate my fees? Is that a yearly thing? Is that every 3 or 4 or 5 years?
Good question. Really matter? Well, I would suggest looking at it at least twice a year, because there are some bottom feeder processors out there, and I'm not talking about little ones, I'm talking about big ones that just think they can get away with changing the merchant discount fee just because they can. In other words, just because a merchant signed up for, let's say, the merchant discount fee to be 0.25%, in all of these service agreements that a merchant signs, there's a lot of legalese and a lot of pages of things in that where the processor can do whatever he wants to do.
Wow.
Okay. And they can physically change that rate. So you have to keep them honest by looking at, very simply, on the monthly statement you get, and you do need to get a monthly statement. A lot of processors do not send out a monthly statement. They want you to go online,
right,
put in a password and user ID, this and that. But you're entitled to see your statement every month so you can keep up with what's going on, okay? Because a lot of processors will just pull a fast one on you and they'll change a merchant discount fee. They don't have to tell you they're doing it.
Wow.
Now, twice a year, or once a year for MasterCard, once a year for Visa, they go up on rates. Now, nothing is across the board increase. Out of 200 different rates, they may pick a half a dozen to go up on.
Okay.
And they typically pick corporate cards, not consumer cards, because the government's watching it.
Right. So Harold, with that information, what I'm hearing you say, and I'm going to push this forward a little bit in the conversation for sake of time. What I'm hearing you say is, I really need to have a qualified merchant provider. But even then, once I have a good merchant services provider, I need to you didn't say hold their feet to the fire, but I want to say hold their feet to the fire and make sure that things don't change looking at my statements at least twice a year.
That's fair. I mean, because it's other fees that they can add too.
Okay.
They can add an annual fee. They can add increased PCI. Just kind of look at what they signed up with on the application and compare it to what a monthly statement looks like and see if they've done anything. Now,
so, Harold, we've covered a lot of information in a very, very short period of time. And I want to ask you one last question here. Obviously, we could go for hours probably talking about all the nuances of your business. But, one question I often ask people is, what is the one question you wish customers would ask you that just never gets asked?
Well, a lot of times the problem that comes up is the person who is responsible in the business for researching these rates. A lot of times the office managers are given that responsibility to shop the rates. But a lot of times the office manager just thinks everything is okay because money comes into the account. In other words, deposits are made every day and they think, hey, everything is fine, money's coming in. But no, typically it's not fine. Business is not a commodity. It's not a matter of picking the cheapest processor out there, because the cheapest processor might not have the service, might change the rates. It may be a bait and switch all the way around. So, if you want the service and you have a legitimate processor, they're entitled to make some money on it. But certainly the business should shop, once every year or two anyway, and see what else is out there, because the merchant services industry and credit card processing is very dynamic, and there are changes, seems like almost daily, to what goes on with Visa and MasterCard, new rules and regulations that came out. And one thing in particular is PCI compliance. And I do want to call attention to this fact that look at your monthly statements, and if you see something on that that says non-PCI compliant, immediately call your rep or call your processor and find out what's involved to be compliant, because they're charging you a penalty every month for not being PCI compliant. I see this every day. One processor, one big, large, legitimate processor I know, charges $60 a month penalty if this online survey is not done. But it's as easy as picking up the phone, calling the processor, getting in touch with the rep, and say, well, I want to make sure I'm PCI compliant, so I can alleviate these non-PCI compliance fees.
Wow.
And they come from people just not watching what's on the statement and not doing that online survey that's needed to be done every year.
That's $700 plus a year just for doing an online survey. That's
right.
Pretty amazing. That's
right.
Like money in the pocket right there, isn't it?
Yeah. And it can go on for years, and the merchant just doesn't pay any attention to it.
So, Harold, with that being said, man, we covered a lot, and I appreciate you coming on and just sharing your wisdom. You've been dealing with this for quite some time, and I would consider you an expert in the industry. You and I were talking off air a little bit, and you were telling me that your website, mlsdirectnetwork.com, and we'll put a link to this in the show notes for all the listeners, but mlsdirectnetwork.com is your ISO. But if people want to directly reach out to you and say, man, I heard Harold on the Financially Simple podcast, and I'd like to talk with him a little bit, maybe have an evaluation done of their particular fees, how can folks reach you, Harold?
Okay, two ways. My cell number stays on 7 days a week because I have merchants that are open 7 days a week, so I always take their call. My cell number is 865-567-6637, and I can be reached by email at haroldfriedman@att.net.
So what we'll do, Harold, with your permission, is I'm going to put both that number and your email address in the show notes so people can connect with you if they have any follow-up questions. So, hey, man, I appreciate you coming on the show today. Thank you so much.
Well, thank you for the invitation, and it is my privilege to help businesses save money where they can, not get ripped off, and particularly understand the dynamics of how merchant services and credit card processing works so they can make it beneficial to have that service at the lowest possible rate in their business.
Well, sweet. And with that, folks, I'd like to thank you for joining Harold and I today on the Financially Simple podcast. And like always, the show notes and links to today's podcast can be found at financiallysimple.com. Right in the middle of the page, click on podcast, and you can drop it down and get today's show notes and links. Hey, and while you're on the blog, feel free to sign up for the weekly newsletter. Look, some of the best writing I do gets sent out on a weekly basis. Tax tip, business planning tip, wealth management tips, and so much more. Hey, if you like the show, the podcast, subscribe, share it with other business owners. And lastly, like I say every week, life is hard. It is. Life is good, and life can be frustrating. Money doesn't have to be. Let's continue to make our lives at least financially simple. Y'all go out and make it a great day.
You have been listening to the Financially Simple podcast. The information in this show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor.